Hey, this is Sasha Evdokov, and welcome to another episode of Let's Talk Stocks, episode number 113, Your Positions in Bullish Market Conditions. So it's December 8th, 2016, and right now the S&P is up about 7 points. 2250 is the level we're kind of getting into. So I want to talk a little bit more about your personal positions and what you're probably going through as you're looking at the market as it continues to trend higher, and some things you want to consider depending on your own personal situation. So before we get into that, a couple of quick things and announcements. I posted a few critical charts around the indices, but as we'll get into this, you'll note that and understand why I really focused more so on the indices than individual stocks. So that was posted December 7th, 9 charts, kind of simple, a lot less charts there this time, but again, we'll talk about that here in a minute. New webinars posted for course owners. So we did a pretty long, intensive webinar, and if you go to the Rise to Learn website, which is where we hold all the courses, anything with options, the options course, we put up 2 webinars there. So a bonus video now, you get that if you own the options course. Just log in, it's going to be posted right there. Bonus video 1 and bonus video 2 about, one is about hedging, the other one's about the options panel platform. And you also get that as well if you have the options mastery for the business of verticals as well. So it was added in here just a couple days ago from our class and lessons, which I thought went really well, and we'll probably do more webinar series here shortly. So again, those were added, bonus 1 and bonus 2. So that was the other thing. And one new announcement, I did refilm and added quite a bit of content to the Accelerate Your Stock Trading Education course. So the new version's coming out probably towards January timeframe. It's all filmed. Just have to do some final editing to it. It's probably about 3 to 4 times as long as the other course, with more examples and some additional content and some additional modules. Anybody who has purchased the previous course or the version 1 course will also get access to version 2 absolutely for free. So if you want both versions, you want to make sure you get that course fairly soon, because once we do the switch on, then it'll only be the new course that'll be available. But that way, if you're looking for the new course and you want the old course, it's better to get the old course right now. And then when the new course is released, you'll get access to both. So that's just my way to contribute as things evolve, as I am able to film a little better or quicker, or able to just broadcast and streamline things a little bit easier. It allows me to put more content and information on hand and available to you. And some of these courses were obviously created a couple years back. So I'm able to expand on those courses along with some of the additional things that I've learned. So that's what we're doing with the Accelerate Your Stock Trading course. So that new version is coming out probably in January time. So in either case, let's take a look at the markets, what's going on and what's happening here. Overall, the markets, if we just take a look at the S&P, I mean, the run and the expansion that we had, especially since these lows right there, since the election, have been extreme. They've been extreme. You could say that we broke out right here past this resistance line. So that's one thing. And we came back to retest this support line. And then again, we consolidated slightly and we powered higher again. And as I look at this, we just continue to keep pushing higher. So you're probably in a few different variations of this trade depending on how you looked at it. So I want to look at it in a couple ways. Number one, your timing with overall being in markets. So if you're brand new to the markets and this is the first time you're experiencing this, I have some words of caution, because if you've been trading 1 or 2 months at most and you're experiencing this move, this is not a normal or realistic move. I've talked to a lot of traders in the past. I've done a lot of coaching in the past with people who've traded in the past. This overall right now is a bull market time, which means you could basically close your eyes, throw a dart, and stocks are going up. And everybody is a genius during bull markets. So if you think you're ahead of the game, just be a little more humble about it, because this is not a normal condition or situation. These things can last for a month. These things can last for 3 months, 6 months, a year, 5 years. It really depends. But the more you stretch it to one side, the larger the drop. So my first thing is, when we're looking at your various position, is you're looking at your time frame. Okay, so if you've only been trading for 1 or 2 months, this may seem really good. For others of you that have been trading for 2 years, maybe 3 years, maybe 1.5 years, maybe 4 or 5 years or 10 years, just dabbling in things, you realize that this is a unique scenario and situation. So be mindful of your own personal emotions, especially as you're looking into these kinds of situations. Because number one, if you've been trading for 1 to 2 months, you're probably making great money. You feel good. There's a lot of euphoria out there and you're buying because you can't do no wrong. Now, if you've been trading for 1 or 2 years, you probably have some balanced edge and you might feel like you're missing the move. Okay, so there's two different feelings here that are going on. And if you were shorting the market, obviously that's a position based, you're probably not feeling very good. So let's break these things down on kind of the chart perspective. So number one, you're all at different scenarios and situations. If you've been trading this last month and a half, you probably just saw a slight pullback and then you now have this run expansion, which you haven't seen a lot of. And you have to realize that markets, they do go up for much longer than they do to the downside, but the downside moves are much more violent. So the more stretch that you get, the stronger the pullback usually becomes. And if these things have a major pullback, are you taking profits into strength? So that's the key, is if you're new to the markets and you've been trading for 1 to 2 months, are you taking profits into strength? Now, we haven't had a lot of red days right here, except just a few. So if you take, let's say, 1,000 shares in whatever stock you've traded, are you taking, let's say, 200 off the table? Or are you taking another 200 as it goes higher? This helps reduce your risk. If you're not doing that, you're going to pay the consequences eventually, because this business is about taking money. And you might be saying, well, why don't I just simply continue to move my stop, continue to raise my stop, and then if it hits my stop, I get out? Because sometimes those stops can be blown past, especially on down days. And that's why you do it, is because there could be 1 day, 2 day drop that just blows past your stops and it could wipe you out. So be mindful. If you think you know better, by all means, you can trade it the way you want to trade it, but just be mindful of taking profits into strength. When things are really good, when you're making, let's say, in the last 20 years, when you don't have a run such as this one, then you want to be mindful to take profits into strength. Looking at the other side of the picture, if you've been trading, let's say, the last 2 to 3 years, or you're even a short, a bear, you're probably in a position where you're kind of, well, I've either missed the move, I'm not making enough, or potentially, you weren't long. So what do you do? Or you're losing money because you were short, because you saw this was building some consolidation levels here. What do you do? Or how's your mindfulness and how's your thinking processes happening? Well, you're probably, number one, either losing some money or not making money. First off, if you're not making money, don't stress about it. If you're losing some money, but you're sticking to your game plan, you're okay. Don't be too stressed about it, because again, these are not realistic conditions. Keep in mind, we are trading based on, number one, potential policies, potential euphoria. There's a lot of rotations going on, like when you start looking at stocks like a Bank of America that go up like this, or a Goldman Sachs. These are not normal conditions. U.S. Steel, for a steel company to go up this high, these are not normal conditions. So can they continue to go higher? They can, to some degree, go a little bit higher, but you're starting to get into stretched valuations, and eventually that comes back. Can it continue to go up for another month? Yes. Can it continue to go up for another 6 months? Yes. But when the pullback comes, it's always much stronger. So keep that in mind, that this can be building for something even more larger for a pullback. So you stick to the game plan, but you have risks on both sides, regardless of whether you've just been new to trading or if you've been trading for a while. So looking at, let's say, a stock like this, Bank of America, you have risks on both sides. If you get in it right now or right here, your risk is that it could pull back right here and still nothing be wrong with the stock. And that's a pretty good pullback in Bank of America. But you also could be missing out on further potential gains. The other side is if you short it right now, you could have a nice potential to come back to, let's say, a certain situation like over here or over here. I'm just throwing some lines out there. But, the stock could continue to run a little higher, and then you'd be losing out on your short. So you have these two, interesting high risk situations that you're in right now. But again, keep in mind, when the S&P, when the Dow Jones, when all these stocks in these indices are making, like over 300 companies are making 52-week highs, that's not normal. And you have to be mindful and realistic of your own personal situation and game plan of the potential of it continuing going higher, the potential of it to break lower. So for me, right now I've pared down some of the short positions because I was a little more balanced. So I've pared down a lot of my short positions. So I'm just barely slightly short, but I have really wide spreads out in options for selling out puts as well to counteract some of this momentum. So for example, if I basically am not trading anything around this range because I know that the potential for these stocks to come back to 2,200, they could do it and nothing be wrong with it. And that is simply because we have additional risks coming up. After the new year, you have things that are coming up because it's a new cyclical year. People may take profits because they're looking to maybe hold on to those gains until the new year, because otherwise you pay short-term capital gains tax. The other thing is you have the FOMC meeting coming up next week. I think it's Wednesday or Thursday, but I believe it's Wednesday, to do the federal interest rate announcement. So right now we're kind of melting up with a lot of shorts being squeezed, a lot of euphoria, a lot of retail traders. The volume it's there, but it's kind of diminishing in some regards. We did have a nice little pop and spike right there, which fueled some stocks a little bit higher again, which was pretty good, significant volume. So this is, in reality, a bull market. And if you wanted to see what a bull market is, this is what it's all about. Because you could close your eyes, you could throw a dart, and everybody's a genius. Because most stocks, whichever ones you look at, they're making higher moves, higher high moves. And with that in mind, you need to be mindful. So if you've been trading 1 to 2 months and this is what you're getting in, you probably think you're a genius. But keep in mind, these are not realistic scenarios and situations. So you want to be peeling things off into strength. Number 2, if you've been trading for a little while, you're either missing the move or you're short and you're losing out a little bit. Again, keep in mind, these are not real day-to-day, week-to-week, month-to-month. It's not statistically normal for stock markets to do this without having some pullbacks. So you will probably see some sort of pullbacks. If we look at this, you will probably see some sort of pullbacks within February time. And I say February because that's after the inauguration and those kinds of things. You'll probably see those things start to come forefront, if not maybe sooner. At least getting into more normalized levels, meaning you'll have a few days sideways, you'll have a few days up, few days down. That's more normal and realistic. Right now, as I look at things, basically every day is an up day. And, out of the last few days, in the last month in the market right here, on the SPY, we went up 13 points. If you look at the S&P, we basically went up 7-8%, which is your yearly gains on a good bull market you made in 1 month, 163 points, and you only had 1, 2, 3, 4, 5, 6, 7 red days. And, that statistically, that is extreme. So be mindful as your positions and how you're positioning things and what you're looking at. And looking at some popular stocks, let's just take a quick look at them real quickly here as we wrap things up. Is looking at Facebook right here, your line in the sand is that 115, 114 level. It's bouncing right there, but we're struggling a little bit at that level. So again, these are some popular stocks that they're pushing a little bit higher, but it's not on major volume. The stocks that are moving well are things like steel. And, if you haven't seen the Amazon Go released things that are coming out, let me just pull that up. If you look at Amazon Go, basically what's happening with Amazon Go is they offer free checkout or checkout without having cashiers in line. So they're innovating things, right? So things are changing. The environment is changing. So the fact that the industry itself is changing, if you look at things like steel, if you look at things, like banking on its own, for me, yes, people are buying, and yes, you have to move with where the big boys are moving. But looking at industries like the steel companies, to me, as far as promises like on Donald Trump to bring back jobs for steel, manufacturing, that kind of thing, I find it to be very difficult in the long run. In the short run, maybe in the first year or two, it's possible. In the long run, just the way that things are moving, the jobs are becoming a lot different. It's not to say that you can't bring jobs back and have more growth in jobs or the job market, but the jobs are different. They're usually not necessarily going to be, I would say, manufacturing jobs. And that is just by seeing how Amazon, for example, is moving things. The same thing has been happening to garbage trucks with the guys, doing the lift, where now the truck has a lift and an arm, and there's now one guy instead of 3 or 4. So all those things are changing in our world environment and world economics. So you have to be mindful of what's going on. So yes, right now we're built on euphoria, but no policies have really taken place. And if you really look at this run, even the run with the carrier deal, they said they saved 1,000 jobs from moving to Mexico, and the union guy comes out and he says, well, it was really only about 500. So all these things, remember, get embellished in politics. And if you really start looking at things, like even Goldman Sachs, for it to come up so high, so fast, like a biotech, yeah, it's nice, but, eventually these things do pull back. They don't go up forever. Eventually they pull back. And what's interesting to me about some of these things is, we're coming into 2008 highs, which, as you can see, what happened in 2008 was a major sell-off. So if we can break that level in Goldman Sachs, I'd say that's fine and dandy. But beyond that, I'm a little cautious. Looking at Netflix, again, these are leading companies. They've been leading the markets for years, and now, except for this last month, they're not leading now. So that has me a little bit concerned. Same with Apple. They say that there's a rotation going on. Rotation, great, but the earnings need to come in. And that's really where you get to see it, because we have earnings month in January here coming up as well. You're going to really see how things play out, but more so towards the mid half of next year. So if you're trading these things and you've been trading these kinds of stocks, and you feel like you're not making a fortune, or how much other people are fear of missing out, don't stress about it, because again, these are not normal market conditions. You don't want to be chasing things. That's the one main thing and main point I want to make for you, is that you don't want to chase these things. Once they're this high and powering higher, don't chase, because what typically happens, especially for me in the past, when I used to chase things like this, and I used to get into things even at these price levels, or even if I got into these price levels, I was greedy. I wouldn't take profits in the strength. I'd get in right here, and eventually these things start coming back, and I'll say, it'll go higher, it'll come back, and they continue to go lower, and it would go beyond where I entered. So be mindful of where you're at. If you've been trading 1 or 2 months, you want to be a little more careful, especially in these conditions, because you think you can do no wrong. If you've been trading for, 1 to 2 years and you feel like you're not making a lot, just go into things slower. Go into things a little bit slower, because those things will change. A pullback will happen. It will happen. It's just a question of when. Or trade lighter. So if you normally trade 1,000 shares, go in with maybe 100 or 200 shares. Get less exposure. Maybe you'll make less on the upside, or you'll make less money on your profits, but you're reducing your risk that if and when that pullback comes, you're not as higher exposed. So those are some things to consider. Let's take a look at some other things like Google here. Again, looking at these big players, we're not really moving in a big way on the big companies. So you can see right here, this company, it's been just moving right under the moving average. Amazon, same thing. We got into, if you back check it right here, we're doing a slight little pullback, which could be a nice potential entry point right there. 700 would be ideal, but we're doing a slight little pullback. You can see we had some swing lows over here, some swing lows over here. So in theory, you could say, okay, well, this is a trend line, but you also have some gaps and overhead resistance right here, which kind of is creating some problems for the stock. So keep that in mind, that you have the clusters right there that are significantly bearish for this stock. The ones that are powering higher, where the money is moving, are things like US Steel. They're things like Bank of America. you can see the influx of volume, and it's typically just the money moving from the big boy companies and the leaders into these companies. So it's not, in a way, I don't see new money stepping in. I see more along the lines of the rotation is what's going on. And you do have the volume that's there, but the key question is, can it last and how far stretched? Because for a bank to do this, take your profits. You have to take some profits into strength, especially if you're new. If you're experienced and you were able to catch this run, you should be taking your profits. If you don't take your profits and you're experienced and you've been trading for a while, and this comes back, you deserve it, because in simple terms, you're making a boatload of money. The run is extended, and if you're listening to this video, this is a wake-up call that when things get a little stretched, they're going to pull back. So just be careful where you're at position. And if you look at overall Bollinger Bands as well, whether it's the S&P, you can see we're way beyond it on the percentage level. So statistically, on a probability level, we're very stretched. So for me, I'm cautious. I am more now long as far as all my positions are. They're more so all long with slight tiny bit of shorting potentials and possibilities. But in general, you want to be careful in these kinds of markets, and especially it depends on your experience how you are positioned. So just be nimble and mindful. Anyways, thanks for joining me today. I hope this was a little bit of insight into the market. Again, I didn't post as many charts this week simply because just about any stock that you pick would be going higher. So if you look at the percentage change, not today more so, but more so the previous couple of days and weeks, just about any stock that you picked was going up to the upside. I mean, look at this, National Bank Holdings, boom, higher. Right here, UMB Financial, boom, another one higher. So a lot of them were powering higher, and you could have made some good money, but keep in mind, again, these things will pull back eventually, so you want to take your profits. But you can see, like here, these stocks powering higher way beyond, like if you look at it, here's the normal level. Even here, you could see the normal levels. This is what's normal day to day. And then sometimes the abnormal points, what I could point out for you is, okay, this is a pretty solid pullback. Even right here, this has some differences right there, but this again, so those are the abnormal areas, and you can take any other stock, right here, same thing. That right there is not normal. You get a few discrepancies in these positions where, okay, this is pretty solid. This also is a pretty large, something different. But now you get into something like this. I mean, just take a look at that, right? I mean, it's a big, big move for these kinds of stocks, and based on the normalcy levels of a market. So that's the thing. When you get too many people on one side, if everybody's on one side, then everybody's going to be on the other side eventually, because there will be no sellers. So keep that in mind, that especially if you get these stretched moves, the more stretched it gets, the larger the pullbacks. All right, so thanks for joining me this week. I hope you enjoyed this week's video. If you want to continue learning, just watch some more free videos. Click the thumbnail right up here. But if you want to see some of the courses and trainings that I have available, as well as some books, then click the thumbnail over on this side. All right, thanks again. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.